everybody. Welcome to another video from Arete Trading. This is where we get into the facts and info of what it takes to be truly successful without any of the hyper flash. And we're going to get right into it today. We're going to review a bunch of stocks that had decent moves today and look like they're ready for breakouts. When we do this, I give out actionable ideas, meaning not only do we review what transpired, but we go over where you may be able to get in or out if you're not in something already, or if you're already in the trade, what you want to look for as far as continuation. So I'm going to run through a lot of the top movers and some of the most active today as well, some of the ones that a bunch of followers asked me to cover. At the end of this, I'm going to run through just the Qs, the Philadelphia Semiconductor Index, ETF, and the 10-year Treasury, just so you can get a sense of where we are at in the market, and if we have time, the Russell. But let's just hop right into it. So the first one I really want to jump into here is CELH. And all this is just from the newsletter, so we can just ignore that. And let's get rid of the indicators for a minute. So this was, the way this is mapped out, just I don't feel like clearing it out. This was from the first time that we traded the stock, or from the newsletter. And if you don't get the newsletter, there's a link in the bio, and it's free, and it comes out 3 times a week with actionable ideas. But I just want to show this line right here. You know, it's not beautiful. It's certainly not pretty, but it's there whether you want to see it or not. And what's interesting about it is that it rode all these little wicks down and then kept bouncing up until it finally broke, and then you had earnings, and that was the end of it. And then, as these lines tend to do, this one became support and resistance, right? When they flip, and this one flipped, and look how it became resistance now. Okay, so 4 days ago we got through this, and I've been watching this, and I really wanted to get into this gap. We got into the gap today, and we just didn't have the follow through. So we may roll down and then go. It's usually not the first time up, right? You know that. I mean, if you've been watching stocks a while, it's usually not the first time up. You might not remember it, but you're aware of it. So let's just lay this out there, and let's get rid of the 5 and the 8-day moving average for a moment, and let's get rid of VWAP because we don't really need that. And let's just look at what's transpiring here. Not since earnings has the stock been above the 21-day moving average. So the bulls are absolutely in charge of the stock right now. And I'm trapped between the 21 and the 50, but I'm in the gap. Now, because I'm in that gap, and I know I'm spending a lot of time with this, but I like this trade a lot. And I don't know if there's enough meat on the bone to put it into the newsletter, but I do like it. But you should be able to get to this 59.22. There's 7 points here. And I don't think it's that hard to figure out. So, you're looking at a 13% move. I don't think it's that hard to trade this, because essentially what you're doing here is you're setting this trade up with, if you break the 21-day, you just get out of the trade. And you want to see that you're clearing here as well. And for those that watch the RSI video, look at this. Okay, so you have a positive divergence on the RSI by where you are right here, right? And here's your positive divergence. You can see how the stock's higher than it was here, right? And then you're basically in line here, so that's your positive divergence. And on top of that, you broke your downtrend on your RSI. So we're heading in the right direction. Now, volume's not been great at all, and I'd like to see more volume come into it. But this has a lot of potential, and I would definitely put that on your list if you're looking for a shorter term trade. So this CCJ. So I'm not going to get into what all these companies do. We just really focus on the technicals here. You can Google that and look that up yourself. So really, in regards to this, you can see the ascending, look at this ascending trend that's right along the 50-day. You see it? And you can see how when we keep hitting these peaks that we're pretty much having a negative divergence here. And I'm trying to just hammer home RSI for a little bit since I did the video this weekend, so people can understand that. So I'm going up and the RSI is coming down. That's not really what you want to see. It usually means that you're due for a turn. Now, that could happen now, it could happen weeks from now, or it could never happen. They could just grow out of it. But it's just something to be aware of. But by looking at this, I mean, it looks very pretty, but you're having trouble with this level again. So at this point, if you were in this, a lower low would get me out of it. I mean, and I guarantee you we'll see something negative. Yep. So like a lower low would get me out of it. Got to get me out of it. If not, I'm coming right back down to here. And I don't know that I want to go for this, because then on top of that, I would have this wedge line as an issue, which is now there anyway because of this peak. So, it's not something I really would be jumping into until I get above this level. So for me, if I was really hell-bent on owning this one, let me just show you the level that you should be aware of right here. And that's not going to do it because I want to put a number on it. Hold on 1 second. Let's get rid of this. And we're going to use this right here. So 1868. So I would do 18 3/4 is really where I would become interested in it. If this was one I had to own. This is just bothering me, the negative divergence. I do like this trend. I mean, it's straight up, and there's definitely accumulation at the 50-day. And that's the other thing. If it pulls back and doesn't hold here, and you want to own it, I mean, it's pretty clear where you buy it, right? I mean, you should be able to see these lines and how the 50-day. I'll put the white arrows there for everyone. It seems like the white arrows and the targets have been a hit. So I would suggest, on pullbacks to that 50-day. And then if you really want to be in there, you have to use this 18 3/4. You have to break this higher high that you just weren't able to break, right? I mean, you can see also right here. I mean, look, you can see the level. So 18 3/4 is where you have to be. So I just want to cover these again fairly quickly. And this is Discover. And, I've been hammering on these because people are, you're bottom feeding a little bit. People are trying to bottom feed on these. And I get it. I'm not saying not to. There's a line that we've been talking about, and we still are not above it, this 45-20 line. Now, we have the RSI basically falling off a cliff, which means that you're due for a huge snapback when it happens. Maybe it's tomorrow, maybe it's not. The one thing I would note is that the red volume is dropping precipitously. But usually when these companies come out, like Credit Suisse First Boston and Nomura, and they start talking about their losses, they're just getting started. So I don't know how much more of this is on the books. Usually the first time they tell you their losses, which they already did last week, it's not true, and this time they're up to $5 billion. So we just really don't know where that number is or what's on their books. I just find it very interesting that neither Discovery or Viacom have really come out with a plan yet on how they're going to, buy their own stock back at a level where they are literally off. TME was the only one that's done it. The stock's down 56%, and you're down 56% in 2 weeks. And not a peep from the company about it. So, that tells you what they think about how much stock might still be out there. So just be aware of that. I would use 45-20 as my swing. I'm not saying not to do the trade. I think it's a great trade. It just needs to confirm. DMRC looks like one we've never really done before. So that's what we have here. Okay. So, you can see the pattern on this one where you're just in a complete downtrend. And I'll draw the channel so you can see it. And you'll be able to see the other side in a moment. So what you do with these channel lines is simple. As I always just try to hammer some points home that will help people get better at charting, especially beginners. You clone these lines. And the reason you should be using software that closes these lines is very simple. They have to have the same trajectory. If you don't have the same trajectory, you don't have a true channel. And you just use whichever one, you use whichever one looks like it's more major. So to me, this top looked more major than this bottom because of the way that it was hitting. So you can see how we're just right along this, right? We have not gotten out of this trading range and this break since December, since we broke. So what's my hurry here? I broke the 50-day up here. Right, and after I broke the 50-day, these lines become support and resistance. This one became resistance. 21-day broke, that became resistance. 200 day we've broke, and now we're teetering it on just like we did on this one and this one. I don't see why I would run into this, and I keep hitting the lows of the RSI, and I have this huge downward trend of the RSI. So I mean, I don't really know what my buy area is here. Like, why do I need to be in this? I think there's much better ideas out there. If you look across the board, you really don't have any support until you're down here on the chart. I mean, there's really no, from where you're at, there's nothing really here, right? There's really no support. So when you really drill down into where your next support level is, you use these pivots like this point here and right here. Okay, that puts me at $22 below the 200 day. So as everybody's aware, the 200 day is the last bastion stand for the bulls, meaning if you break the 200 day, the bulls have given up on it. Everybody's basically given up on the stock. I would need some serious confirmation of a close above the 21 day before I would even consider this. And you can look at the 5 and 8, see if they're giving you any love. And I didn't think so, but they're not. I mean, now they're starting to become resistances too. Usually this means you might get a break and a flash out and then possibly a pullback up, but I wouldn't be chasing this. DNN looks like one that we've looked at before. And, we had this line here. Let's go to this. Let's get rid of these indicators for a moment and just see what's going on. So, I don't usually like looking at these smaller ones, but let's just do it. And everyone knows why if you've been listening for a while. I just don't like the smaller ones because they're very easy to manipulate, especially when you're in these chat rooms on Discord and on Twitter. I mean, there are people that have positions in these, and then they come out and hype them, and they stick the little guy with their stock. It's not a real way to make money. So you see that base in between there, and you see the rejection today of that base. This is not something that you need to be jumping into at all. I mean, you could see every single sales spike, every spike into that is just met by selling. So whoever has a bunch of stock is selling right into that. And if we go look at the indicators and we just look at that level, when you're here, you can see that huge red spike, right? Here, I mean, I don't even have to look at the chart. I'll tell you exactly where it is. It's right here, right? So every time you see these spikes, and when this prints out today, you'll see another huge red spike there. So if I own this, I would have sold it on this, and I would not buy this unless you really wanted to until it broke 132, 133. Right. Fudu, I just want to pull up because we broke down and then we rallied, and we look really good here. And we're going to get rid of these indicators for a moment. Just look at price. So look at how we're holding that 142 level. We ran up. Right? We tested to see if we were ready. We weren't. We came right back down to 142, and we're holding. And we're holding right along that line. So I'm pretty happy with the way that this is acting. I really think there's something there, and I think it's something that you can, take a look at. You're right against this wedge line, and as I talked before, these lines become support and resistance. That line is now support. So you're wedged in there, and what's your stop, right? Your stop is a close below 142. Let's throw in some of the bells and whistles. And you got just a lot of support in here, right? Let's get rid of the 5 and the 8. You can see that crossover, which is positive. But look, this 21's turning up, okay? This is turning up, okay? So now we're not breaking the 50. We're hitting the 50 and bouncing. It flipped from resistance to support. This one flipped from resistance to support. So I have 4 key points right here at this 142 level. What was the low of the day? 140. So you went $1 below the 50-day and then bounced. And really you went to probably you're right on that line. So this is the area, and if it closed below the 142, I would be gone. Definitely if it closes below the 50-day, I would be out. And it's something for you to watch. But here, this is setting up. So you can get in here, or you could just wait for the higher high bar for it to flip that, which is 154, and go from there. But that should definitely be on everybody's radar now. So this GMBL looks like we were in the newsletter. And let's see, we got stopped out. And look, this has been in here for a while, and these lines are they're still there. Look at the volume and how the volume's just completely dried up. Like there's no volume in this anymore. So that's not something that's really ringing home to me, that telling me I have to be in here. Look how we rejected right at the 1776 level. This should be pointing down. Let's remove this arrow and try to get this one to point down. There we go. So you can see 1776 and why we're having an issue with it. And we've been having an issue with it. We've had an issue with it the whole time through here. Couldn't close, right? Couldn't close. One close. This time we're really going to do it. Then they just gap us up and drop us down to support levels. Not what you want to see. So if you really want to own this one, you have to flip the 1776 level. Frankly, with the low volume, I would just be looking at other names. There's some other names that out there that are in the space that just have way more volume. This just looks like, you're going to fail breakout after fail breakout. Why do I say that? Someone's going to ask me. I'm going to show you why. Look at all these wicks. See them all? And what's a wick? And I will do more basic trade like a pro series like I did with the Bollinger Bands and the RSI. And I'm just going to break down trades and very simple chart patterns so people can look at and really understand this. This part's the wick. Okay, this part, the part between the body where we open and close, this little part, that's the wick. Okay, so when I say wick, that's what I'm looking like. Why do we call it a wick? Because this is a candle. What comes out of a candle? A wick. It's not, it's not anything too Machiavellian. It's really that simple. So you can just see, man, you're just bumping right into this, and it's not going to work. And until that breaks, you just got to go. You can't stay there and wait for that. So just wait. Wait for that to break, and I'd be looking at DraftKings and Penn. And I actually like Penn today. I thought it was kind of humorous that the stock dropped on what happened with him, with one of the owners of the company. Anyway, so KOPM, we got in at 11:15 in the newsletter. We broke this rally down. We did not close above the 11:13. I know people are happy that it came back. I got to be honest, I'm not really happy with the action. This is not what I want to see. And, I would tell you to please, consider using that stop. This double top right here, right? And that's, you can see this line here, right, that we broke and looked like we were going to really push. But look what happened here. Okay. We closed right at this 1165 here and here. And now we have a kind of a double top up there, right? So I couldn't even get above the one line today. Now, we can throw other lines in there and look at the moving averages and see if we can get some more color. And yes, you have some support, and yes, they're all pointing up. But that was not the move that I was looking for after having this level of, look at this volume, right here. And on that volume, I almost felt like out of everything that this was one that was just going to explode today. And that's not what happened. You never know what's going to happen. You come up with a plan. But you see what I'm saying? Why didn't we explode up on that? And then when you really start digging down into it, we didn't really explode and follow through here when we did it. We did here, right, that nasty bounce off the 50-day on that day. And then here when it was first getting started. But right now, it just looks to me like we're still having an issue. This actually looks like it's forming like a rising wedge, and that's kind of scary. So I would tell you to just keep, I'm not telling you to change the plan, keep the stop where it is and go from there. It did rally today, and maybe it does push tomorrow. So let's see how it goes, and we'll go from there. KTOS, this is in the newsletter. We're in at 2850, we're at 2850. There's really no reason to do anything here. Your 50-day moving average is at 2813. We're staying above that. Our stop was the low of the day we entered it. Look at the 5-day moving average right now. That's become your support line. Now you're above the 50 and the 5. The 5, 8, 21, 50, and 200 are all pointing up. Your RSI broke its downward trend and is now pointing up. So you're above a higher high. There's nothing here that leads me to believe that we need to move on this trade. And frankly, I think defense moves are going to have a big year. with some of the geopolitical stuff that's going on. So, just an opinion, but we trade price. So, and you can also see, like, get rid of all this for a moment. Let's just get rid of it all, right? Here's your flagpole, right? People know how I draw these if they've been following for a while, but let's just do it. Okay. See from here, right here. Here's the top of your flagpole, or your flag, right? Here's the bottom of your flag. Okay. So here's my flag. Here's the pole, here's the flag. And I'm doing this right under key resistance levels. And we know what this leads to. It leads to a push. It looks just like the target trade we showed yesterday, or I showed over the weekend on the stocks to buy list. So this looks like it's getting ready to break out. I have a high tight flag. And why is it a high tight flag? Because this is the flagpole and it's at the top of it. And that's what high, again, it's not rocket science. So what do you do here? Nothing. Stay in the trade. mRNA, as far as the news that's out on it, I just don't see how the news is going to get any better for the company. They're approved, they're out there, they're selling their product, right? You would think somebody would buy them, but that's not going to happen because there's too many vaccines. So they're not going to have to do that. So let's get rid of this arrow real quick. And I just want to drill down into this. Let's get rid of these indicators. And I just really, these levels have been there for a while. And I want to see if NVAX was on here. It was not. I'm going to cover, it's interesting, no one asked about NVAX today. I'm going to cover the NVAX next just to show a comparison here. So let's just talk about what's going on here. Okay. You could literally, let's just move this down for a moment. I'm going to put this here. Okay. Point here, undercut, double bottom, real double bottom, put in, rallied right through it on huge volume, through a previous resistance, which I just moved, and we're right against this trend line. Okay, so if you forget what this is and you just look at it, what does that look like? Well, it looks like a huge falling wedge that just came off a double bottom. Right. So let's forget about what it is and just look at the price and see what we can do here. Well, we're above this, right? We're above this one. We're above this one. We have to get above here, okay, 158. So we really don't want to wait for 158, do we, before we get in it because it's 20 points. So what do we need to do? We need to focus and get in on this break. So we need this line to break, and then we need to get involved. Now we throw in the indicators a little bit more, okay, and see if we can get some color on that. Okay, well, closing above this gets me above the 21-day, and let's get rid of some of these other lines for a moment. Closing above this gets me above the 21-day, which it has not been for 2 weeks. So that would be a positive sign. So again, this flip, and you could actually use the higher high of today, which would be 138.25, just use 140. I would use 140 and a close below the wedge line, or the 21 would be my stop. And this arrow is pointing to, let me change this arrow to white so that people can see this. People seem to like the arrows. So that was where you'd be going. Now, where would you be going to? Look, if you come out of this channel, you're going to the head, and that would take us up to here. It would take you to this 185 range, right up here, okay? So if this breaks, there we go. If this breaks and it runs, you're going to that 185 level. And let's take a look at NVAX while we're here, because I think that's, that's just, you're seeing the same kind of pattern here. We talked about this one and heading to this level on the break. But you see how we're holding that 21-day and we can't get above it? And now this support line is flipped to resistance. You can't get in this one either until you flip the 190 level and you're above the 21-day. But if you get above this 21-day, you could run. It could move and head back to this 235.50. This was excellent news that the company had, and it just got ahead of itself. And I just want to point out, we never even filled the gap, which is just really rare. You never even filled this. You just exploded up, and you never looked back. And yet you just got a huge move on it. So 190 is where you would be looking at that as far as where to get in at. Now, this one was recommended by somebody today as, take a look at it, when it turns, it turns. And a gentleman asked me, doesn't this look like that dreaded H pattern you're always talking about? Absolutely. I mean, we laid this out perfectly. We traded this in the newsletter and did fairly well with it. But look, here's your double top marked by these two arrows. You cracked. Here's your rising wedge right here. You'll be able to see this. And we're going to get rid of this and change the properties, get rid of the arrow. We'll make this the light blue. There you go. So you can see the rising wedge. Break the rising wedge. We get the frozen rope pattern the whole way down. You know, everybody's just waiting for it to end, not selling, not selling. Then, you know, capitulation, boom. Rally up to the 21. Cannot break that 21 day. Can't break this. Now, this is a left shoulder. This is a right shoulder. Okay. So people, head and shoulders patterns, they have to break. You know, head and shoulders patterns, it's a nice way of saying something should happen, but I don't know if it's going to or not, right? Like you can't just trade because you have a head and shoulders pattern. It doesn't, they will reject as many times. If you actually go back and run like a back test on them, which you can actually do on software, they'll reject as many times as they break. You just need to be aware of the pattern, and then when it has rejected or when it has confirmed, that's the purpose of understanding the pattern. Not so that you can be proactive to the pattern, but so that you can have a plan. So what do I see here? I see us holding this, we're holding this line, aren't we? And here's the 21 day. So this is a very simple trade. I think that, you know, I wouldn't touch it here. Once I get above this 21 day, which is like 940, 950, I would look at this. This becomes very interesting. Why? Because that means that we held the head and shoulders, right? And I'm just going to highlight this. So there's the left shoulder. Here's your head. That's a lot bigger than we want this.
Market data connection loss.
Let's remove this rectangle. And put this here. So there's your head. And then here's your shoulder. Okay, so there's left, head, right. So what we really want to do, I mean, for true confirmation of head and shoulders, you have to get to here. I'm not waiting till 12. So I'll buy here. If I'm wrong, this is my stop and I'm gone. All I have to do is close below this line and I'm out. Okay, the line's $8. That's all I have to do. And 9.5, so it's $1.50 to stay in this. Head and shoulder patterns that confirm, meaning we get through the 12, they go to these levels. They'll go to $17, $18. So when this moves, this can really run, and it should be on your radar. But you're just not there. So you really want to put in, and I know people like the arrows, so let's go back to them. So really what you want to do is you want to wait for a break of that line and then get involved in it. That's where you want to be, right there. NNOX. Look, I talked about this the other day. Let's remove the segment line. You know, when it opened up, I liked it Saturday as, you know, a stock to buy list. And then Monday morning, I was pretty clear on Twitter, like, you got to go. You can't be involved in this. They overgapped it. People will say, what's an overgap? An overgap is when they take something so high off of where it closed previously that it's really hard to touch it, because people that play the gap trades want as close as they possibly can to this gap so that they can get in and know exactly where their stop is, which is usually 15 cents lower than where that close is, right? So that's one way to trade gaps. I can do a video on that actually. But so what you want to see here is this top part right here. You just, what was the high? You're open, and you sold down all day long, like massively. And today there was no rally. Now we're right against the 21 day and we're right against this wedge. This is like it never even had the news. So what usually happens is this should exacerbate and actually sell down more. Why do I say that? Because shorts put more on up here. If we go look at the short interest, I guarantee it. And people bought this news. And now they bought the news and they're trapped in a stock and it's coming down. And that's why this can get worse. So don't buy it just because you're sitting along here. If we put the 5 and the 8 in, you can see that you're right along these lines. it should hopefully hold here. But if it doesn't, I should have closed that one trading platform before I started this. But if it doesn't close here, you have to go. You have to get out of the way. So just keep that in mind. That's not something that I would recommend getting into right now. It's pretty vocal on Twitter. If you don't follow me on Twitter, you may want to. There's a link in the description, just because I go over a ton of actionable ideas during the day and go from there. But so I added this one today. I'm not happy with the close. I've been waiting to get back in these genome stocks. The BNGO, people know that I like. I like this Pack B. I like the space in a whole. It's a huge space. Let's get rid of all the bells and whistles, and so I can just show you exactly what I like. Okay, here's your bottom. Okay, here's your wedge line. You broke this one too. Okay, but just on this confirm wasn't enough. I needed to get above this level, and I did. So therefore, this break was my buy. But it's just not holding in there. It's just not doing what I need it to do. I need it above there. I don't need it below there. So I'm not happy. So I'm going to recommend that everyone has to trade how they want to trade. If this takes out below, I'll lose my 2 points and move on with my life. That's how I'm going to trade that. Everybody has to do what they want to do. I should not be breaking the 50-day moving average here, not with these pointing up. And if it does mean that, it means that I could come back down, test all this, and then come back up. I don't want to wait a week, and I don't want to see if I'm right. If I'm wrong here, I'd rather lose the $1.50 or $2 and just wait for it to go again. I'm trying to make, $56 stock here, right? That's my target on this. And I'm trying to make roughly 20 points. I don't care about losing $2. I'll lose $2 5 times every time to try to get to that all day long, because that type of math works. But I don't want to be in this come to 30 and then see where it's going, right? Like, that's not going to work. So you have to just be really diligent when you set your stop levels, and I'll be really diligent with that one. Penn bounced today at the end of the day. There was, I don't want to get into all of it, but there was a lot going on with the with one of the guys that's part of the company, and there was some negative personal press, so the stock got hit, and it's nonsense. But I just want to point something out, and I'm trying to explain these. You see how you have this negative divergence here on this RSI, and the stock's still going up? Just because you have this doesn't mean that you sell. What this means is pay attention, because this is going to end. What happened? This ended. That's all it was telling you, is that, hey, this party is going to come to an end. We don't know when it's going to come to an end. And truthfully, and I said this earlier, and I said it in that video as well, this didn't come to an end till 3 weeks later. And then here, if you thought about this, it didn't come to an end till 6 weeks later. So you don't sell because of the negative divergence. You pay attention to it and then look for signs that, hey, maybe I need to get out. Like, hey, every time I'm breaking above the upper trend line, what happens? It rejects. I mean, this was added to the S&P. This is a classic add to the S&P, sell the stock move. What do you do now? Look, I have the 50 right below, which means institutions are not buying it. The 21 is crossing the 50 to the downside, and I'm retesting the 95 lows. And my RSI is rolling. It's very hard to go near this right now. Okay? If I popped back in this channel, let me get rid of these indicators to clean this up. See, I have this channel line right here. Whenever you break a channel line, in order to maintain the channel, okay, you need to do what? Pop back in it within 3 days. Did we pop back in it within 3 days? No. The channel's broken. So this is telling you that we could just, doesn't mean that you're going to, $50 or wherever, or $75. It just means that you might just be bouncing around here for a while and consolidating for months and months before it goes anywhere. And as always, when you break these levels on the upper channel side, just remember this, that you can come back and test these lower channels, and that's what it's done here twice. So I would not be in a big hurry here to chase this. I mean, there was a little trade there today to play on the bounce and go from there. Pins acts incredible, and Pins is one that we've been in and out of the newsletter and traded and were in for months and it never moved. I've been watching this, and we can get rid of this arrow and this arrow, and I think that it's just acting exceptional, and there's really not much more to say about it. Today you broke above the 50-day moving average. You're closing at possibly like one of the top closes that you had. The volume's starting to come in. It's all green. It just looks beautiful. And you now have getting rid of all these indicators. And let's just clear all the lines off again. And let's get rid of all the lines. So it's helpful to get rid of the lines and then redraw them sometimes, as well as make sure they're back in so that when the trading day is going on, you're fine. But, this was always one of the issues right here, right? And you can see that. And this is exactly that pattern that we were just talking about, right? Here's I'm going to highlight it so you can see exactly what I'm talking about. We just talked about this pattern with NNDM. So I'm just going to point it out again. Repetition of things and pattern recognition seems to help people. So here's your left shoulder. Here's the head. And I'm going to flip this up here and put this right here and drop this down. Now, why is this important? Here you undercut. And then you rolled. Here's that dreaded H pattern. What did it do? Reversed. What happens when these dreaded H patterns reverse and these head and shoulders reverse? They move violently. What did this do? It's up 13 points from that move, right? You're up 13 points in 4 days. So these moves exist, and that's why you have to understand these patterns. Not because they mean to sell, but usually these H's, if they break, it's nasty. It didn't do that. It did the exact inverse. Now, if you overlay the bells and whistles, you can see that your RSI is telling you exactly what it needs to be telling you. Your volume's starting to turn up, and you're above where you need to be. I mean, really where you're going here is you're heading back to this level. And, it's not enough juice in the squeeze for me to put it into the newsletter, frankly. But, because you're at 90, I mean, I want to at least get 20% so people can trim. So it's going to be hard here. But you're heading to this level. I mean, there's very little doubt that you're heading to this you're heading up here. 16 points is what you have right now, and you might be able to get more out of it. But that's where you're heading. And how did I get there? You have an upper trend line right here. And if I took the time to clone this, you'd see that it fits right below it. So this should definitely be on your radar if you're looking for that or you're looking to try and stay in this. It looks textbook perfect. P-ton, you're respecting some key levels here, and we talked about this one. It looks like we had the bear flag here. Let's get rid of the indicators. Yeah, we had the bear flag here, right? And then we formed this, and I was going to walk through that again. Let's get rid of this line. Okay, and we're just going to throw this line in so that you can see what I'm talking about. And we're going to put one more in. All right, so this is my flag. This is my flagpole. Okay, so this is my flagpole. This is my flag. This is a bear flag. Straight down, consolidates, boom. What did it do? Broke, sold straight down. We talked about this months ago, it looks like. Now you're bouncing around, trying to get above it. Okay, so now we know where the levels are. And isn't that interesting that we're unable to close above the bottom of the bear flag? That's not really what you want to see. Now, if you look and you overlay this with it, right, and now you look at that level, you get a little bit of a different picture, right? So you are respecting the 200-day, and you are closing above the 21-day, which it has not been doing. But that 50-day is still pointing down, and it's still coming this way. So really what you need to do at this point is you need to close above the 50-day moving average. And this is not something that you probably go near until that happens. And I'm just going to explain why. Just because you close below these and then rally up, it could be a nasty roll. This is very clear. This is a peak, and this is very clear that this is a peak. And you can see the rounding of them, right? Like you can see, when people say rounding, you can almost see like a circular, right? So this is setting up, to me, to do something like this again and then come in. I don't want to get into the fundamentals of the company. Please, don't email me and explain to me how great the bike is. I get it. I know people that own them, they love them. It's like a cult. They've got a great business. I'm just talking technically, you are riding that 200 day and you need to be aware of that. That's not where you want to be. You need to break out here, and I can't even get above this flag. So what would convince me that I should look at this on the long side? Get above the 50-day moving average and stay above the 50-day moving average, and then I could take a look at it. Rocket, look, we have been over this one so many times. Get rid of all the indicators. You know, this was our line, 23.5. We've been talking about this line. This was the day that we said we finally broke out, and we put a trade in the newsletter and did well with that trade. We actually got this explosive move out of it. So I'm very happy with that, obviously. And you know, we got out. I mean, it was really that simple. I think we put the rest back at break even. But you couldn't break this 27.85. You can't get above it. Even the wick that runs up to it. This line has been there for weeks. And look where it hit today and rejected. Or look where it hit a week ago and rejected. I haven't even been looking at this chart. And look what we can't get above again, 23.5. So I wouldn't go near this. I mean, you even have a doji bar at the end of the day, and that's not the best look either. So this is not something I would be jumping into here. I would just avoid this trade completely until you see, you know, above something like above like this level on huge volume, like substantial, because you can see, like, see how you see this volume here. See the volume the day before? Like all our volumes just dropping off. This is not something to chase here. So skills is one that we've been looking at. You can see all these lines here, and geez, it's like a roadmap. So let's get rid of all of it. And let's shrink this down a little bit. And let's lighten this up. All right. So I was explaining this, and I'm going to leave this part so you get it. Okay. I was asked about the trade back here. Is this where I should be getting in? They did the secondary at 24. It looks like it's going to hold. And I explained that this was not a true bottom. I guess this looks like it was about a week, 2 weeks ago. And you can see this level and this level here. And you can see how it broke, right? All right, so then we broke. Okay, so we don't need this anymore. Why was this not a true bottom? Because we didn't undercut this low. If we undercut this low, we would have had a true double bottom. It didn't do that. So get rid of this line, get rid of this, and now I want to get rid of this. Okay, double bottom. Why? Right here was the low put in. We undercut it here, and then we rallied through it. So this double bottom is in. Now, what is it doing? It's banging its head against 2050, and it's not going anywhere. Look, this is a nasty, nasty move down on a percentage basis, and this is going to take some time. Now, you have some things going for you, like, you know, this trend here, and at the lower end of it, you could turn, but you have some moves that need to happen, and until I get above a certain level, like this is even, you know, this RSI is just in the toilet. People say 30 is where you buy. This is a 25. So you need to watch this. I would not touch this until I can get above 20 3/4. I wouldn't even think about it. I do think it bottomed, but this could stay like this for weeks, or it could roll again. And it's not showing signs of going anywhere. It can't even have higher highs on the day. So, you know, just be careful out there and go from there. You know, it's not something you have to be in it all the time. So here's Snap. And take a look at what's going on here. Hold on 1 second. Let's get rid of this. And just take a look. And it looks like I had this one out there. I don't know why we had this so far out, but we must have been looking at it. So we've had this for a while. We've had this X right here. It rejected this X, right? You rejected this line. You rejected here. Look what you're flipping. Okay, and what do we have here? Okay, so you have a double bottom, right? See how you're here, and now you broke it, and now you rallied above it, and now you rallied above another support line, and now you're breaking the downward trend line wedge today. And frankly, no one asked me about this one. Everyone asked me about pins. Which one should you be looking at? You should be looking at this one. Why? Because this one is just starting to move. The other one has already moved. Okay, so we broke the downward trend line today. This is really very simple idea. So this, you're looking at this line, which would put you at $59. So flip this 50-day, okay, and you're going to see this thing push. And it's going to push pretty quickly. We can get rid of this for the moment. It's going to push pretty quickly to, put this arrow in for everybody, right there. And we're going to just highlight this area. That's where you're going to, up here, the 70s. Okay, so you have 15 points, okay, on a $59 stock, I'll say, right? And I think that that's important to understand. The difference between this and pins is that on a percentage basis, I can make substantially more here. Nobody's talking about it because it's not the one that's moving up right now. But look at how the RSI clearly is showing, and the same exact pattern that this is showing. This is way more aligned. The 5-8 just started to cross. We're above the 21 for the first time today, and we closed above it after two and a half weeks of not. No one's talking about this one. Put this on your radar and look for it to close above the 50 or the 50, and then go from there. That's definitely one that should be, people should be looking at. I might even put it in the newsletter. So we're starting to turn. This is definitely getting better, the RSI. We're curling. We definitely undercut here, didn't we? I mean, let's just put that right in. We're going to use this close because that close gets me here as well. Okay. And just drop it down to here. Okay. So here, and then you can see over here how it used to hit. Undercut here, right? So when we undercut, what does that give us? A double bottom. And then we flip. Now the 5 and the 8 are crossing. The 21's pointing up. This could easily, just on a wick break, and we went over what wicks are before, 240, right? 240 level. What's going on over here? 242. Okay, so say 242.50 just to make the math simple. Should get you a push to the 50-day. Okay, which gets you to 261. So 242 could get you a push. This looks like it's going to turn, and it looks like it's going to go. That's just an opinion. It does look like it's getting ready, and it does look like it's getting ready to move. So Tiger, I keep waiting and waiting, and I know I keep getting questions about it. Yes, we have the higher high today. Yes, we rejected off this 20 the first time. Usually second or third time's the charm. The 5-8 crossover is really nice, and we're hanging in there. And I think the selling may be done in fintech with even what we saw today with Futu and how that line was respected. I still want to close above that 20 before I buy the stock. And I am seeing signs that I'm pretty happy that this looks like it's bottom to me. But I really want to see that close above 20 before I go near it. Until then, I will not touch it. I just not going to go near it. So this was in the newsletter, and we got stopped out of it because I just put a $4 stop in because I didn't want to go for this huge ride down, as I explained yesterday. And I walked everybody through the trade today and said, look, I'm in it at the low of the day stop. This was a very simple trade for me. And I'm going to walk through it on a smaller scale so that people can understand it. Right here, you just have this trend line. And we've been respecting it for so long that it just made sense to just try to play that line. Then all you really had to do was drill down, and we'll just use the 5-minute. And you can see where these lines are. But you can just take a look, and let's just get just this day on here. Okay, so this is the end of the day. And we're going to get you to the beginning right here. Okay, and you can just see how you're bouncing around, right? And then you can just see how we undercut it, and then we just rip. And that's all you really need to see. I mean, you can overlay some of the indicators with it, but you really don't need moving averages or anything. You can see how when you're undercutting, right? I mean, it's not that difficult. Look at the undercut and look at the rip. And you can see here the exhaustion in it, right? And then based upon that exhaustion, look what happens. You get this little doji bar right there. It flipped, and then there you go. You're off. So it's a really easy way to get in a trade, and you can see them everywhere, right? So like even back here, you can see it. Here's your little doji bar. What happens? It rips. Here's your low. So, and that's because you're looking at this 5-minute chart, and you're looking at this line and seeing where you would hit on this line. So that was pretty much the trade, but that's how you enter this. And the range of this versus these bars, this just looks to me like it could just push now because it's so tightly wound compared to the rest of what's been transpiring since it broke out. This is one we keep looking at, and you can see what's going on here. Look, you've broken this wedge. You're in this trend still. We can throw in some indicators so you can see the 50 and the 21 and the 200, but it's not really, you're above them all. It's respecting the 50-day, which is where you buy it. Towards the higher end of the trend line. It could go to $8. This is not something I can make $1.50 if it gets to $8. If that's what you're looking for, that's great. The 640 level, let's see what that level is, because that's where your stop should be. 644 level is where your stop should be. So just consider that. It's 50 cents to make $1.50. Some people will do that all day long. I get it, but that's your trade. And I just want to point this out again. I do think on this is Viacom, and I'm going to put this in here real quick, and then I just want to do the indexes real quick, and then we'll wrap it up here. I'm trying to make these shorter so people can actually listen to the whole thing, and I'm going to link the RSI video at the end of this as well, so people can watch that. See how this is like a small dreaded H, but you see how you're trying to hold here, and then you reverse this line. Let's just blow this up so you can see this. Okay. So today, I actually couldn't close above yesterday's open. That's not great. And I made a new lower low. What you need to see now is you need to see a break of this above this 45.50 level. You need to see something like that to get people into it. What should be most troubling to everybody about these trades, and I keep hammering this, is where is management and why are they not out pounding the table on their stock? You need to really be aware of that. So keep that level in mind and take a look at it for tomorrow. XL, look, these SPAC companies, I know people love them. They're not all going to make it. And I don't know the story behind this one, but this is a pretty clear, let's just get rid of all these lines for a moment. Okay, yeah. All of the horizontal lines. Okay, and let's get rid of this because this is broken. I've watched guys pound the table on this like it's going to be the next Tesla and everything else. I've been around too long. I've been doing this 20 years. So, there's not a new story or a new widget that you're going to tell me about that's going to change my mind that technical analysis is the way to go, right? It just doesn't exist. There's a reason that this line just sits there, right? And it's just charting human behavior. That's all it's really doing. And that's price movement, is human behavior. So we hit there, we bounce. So what? That just means nothing to me right now. The 50's pointing straight down. The 200's starting to point down. The 21's pointing down. Every time I get near a major level, they're selling. What will most likely happen to this is that off of this bounce, you could see an $8.85, $9 bounce to 10.75. Okay, then you have to figure out what it's going to be when it wants to grow up. But you need to get above one of these major moving averages, and not a 5 or an 8, but above a significant moving average, especially with these crossovers and the amount of selling that's going on. I don't know the revenue story on this one. I don't even know if there are revenues, but you just have to understand that when stuff like this starts to come in, this can get even nastier than you've ever imagined. And, for people out there that think you don't need a stop level, okay, you're down 77% in 3 months. So it can always get worse, and that's why you always have to have a plan. So that's it for stocks, and now I just want to get into the SOXL, and I'm just going to use the SOX, the 3X ETF. Back here we were talking about buying it, and we did fairly well with the trade online. We've got up to this 43, 44 level. Monday, I said this is where you start selling. Why did I say that? Okay, here's your channel, your longer-term channel. We ran right to the top of it and rejected. Once we rejected, it was pretty clear that we weren't going anywhere. And now, on top of that, I have this. Does that mean that we're done? Does that mean semis are over? No, it does not. It just means that they're going to rest. Even today, we didn't get below the 43.30 line. So now we just need to flip that little line, and we'll probably continue, and then we'll probably hop eventually back into this channel and go forward, but we're just not there yet. And this one, we talked about that. That's irrelevant now, and this one's irrelevant too. So you just need to flip this line, and I like when they converge like this because people are usually watching these positions, and you can use that as your pivot point. And the easiest way to know what your pivot point is would be 45.50. Get above 45.50 and you should see a push on this index. Until then, I wouldn't go near it. Throw in the indicators and you can clearly see where they lie. It looks great, but it just needs some rest. The Qs, the Qs, I drew this. It's funny. I drew this based upon this payroll number move, and you can see what we're doing. I mean, it's just textbook. So let's get rid of this for a moment, and let's get rid of all of this because we really don't need it anymore. I was just trying to explain what happens with the payroll and how you can use it as a predictive measuring tool. So you got above the 50 for the first time, and you've just never looked back. We could roll back down and then head right back up, but we're not rolling again. We're not heading back down. This is a confirmed move, and we should hop back in this channel, and there's tons of upside here. So maybe don't move as fast as people want to move, but this looks great, and I think this continues. And I think it's something that people need to look at. And finally, I just want to show this so that people can see it. And if you find this helpful, please like this video. I'm trying to get in front of as many people as possible to show them what it takes to be truly successful at trading and investing. So let's go here and just take a look. Okay, I said this in the newsletter. Again, newsletter is in the description. Just click on it. I said that we could be hitting a double top, and there's way too much going on here for people to see this. So let's just blow this all the way up and put this here. So I said you might be hitting a double top, and you were hitting this line right here. So you hit this line, you rejected. Now you're going to the lower end of this channel. That's going to put us right around here, 159, 160. As we roll, I just want to point this out now. Okay, so we're heading to that 21, which looks like we're going to actually close below tomorrow, which will be the first time that we've closed below that 21 since back here in January. Closing below the 21 day on the yield, on the 10-year, is going to be fuel on the fire for the NASDAQ. And I just want to point this out real quick. Let me go back to this, and then we'll call it a day. See this negative divergence in the RSI as this is going up? It's almost telegraphing that this is going to roll and come back in. So that's why I'm trying to stress these to you. They might not tell you right away, but if I'm hitting highs and this is hitting lows, it's a negative divergence. You have to just pay attention to it. Doesn't mean it's going to happen, but you just need to be aware. So that's it. As always, please comment. Let me know which of these you like the most. The arrows seem to be a hit. Let me know what else you think I should be doing in regards to make this clearer. Some of it people are telling me it's a little over their head. I'm just trying to give facts as to what really works. So, but that's it. Have a great night.